Google just reported their Q3 earnings after the bell. And if you're sitting there saying, man, I wish I owned Google. Man, I missed the boat, because year to date, shares are up 20%. Over the past year, shares of Google are up 35%. You start stretching it out to 5 years, 10 years. Shares are obviously up a lot with Google. And some of you might be sitting there thinking, well, I've missed the boat on this one. It's not worth buying. The gains are over. Well, I'm here to show you, based on the Q3 results we just got from Google, there's still plenty of upside in the stock, not only over the long term, but I think probably just over the next couple of months with Google. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. I tell you what, if you own Google shares, you're doing really well. During the regular trade, shares were up about 1.6%. And then in the after hours, after reporting those Q3 numbers, shares of Google are popping up over 4%. I'm going to show you technically, folks, we've got a ways to go on this one. Probably another, I would say, 10, 15, 20% upside on this one, just to continue the technical pattern. Now, before we get to the technicals, let's look at the fundamentals. Revenue coming in at $88.3 billion over at Google. That was a 15% growth rate year over year. They beat expectations by just, and I say just, a little bit of cashola, $2 billion beat. They bit big time on the EPS side. We'll get to that here in a moment. I do want to highlight something, though. As we start to look at Google, they're trading at 21 times forward. The company consistently beats on their earnings. I would say that the price to earnings forward is probably in the high to mid teens. And I just did a video on PayPal trading at a very similar valuation. The difference between Google and PayPal is Google is growing at a much faster rate, near double digits. In fact, over double digits, low double digit growth rate, really out for the next year, even 2 years over at Google. And part of that has to do with the fact that they've got this Google Cloud business, which just is absolutely on fire. I'm going to show you how much on fire. Google Cloud last year, $8.4 billion business from a revenue perspective. This year, all the way up to $11.4 billion of revenue in the most recent quarter. Now, what's also been exploding over at the company is they hit a tipping point from a profitability standpoint. We started pointing this out about a year ago on our videos when we would cover Google. They were hitting a tipping point. Last year, they made just $266 million. This year, all the way up to nearly $2 billion. Now, obviously, year over year, this is quite an acceleration, but what I want to show you is the quarter over quarter growth the company is experiencing in their cloud business. Google Cloud last quarter, from a revenue perspective, had $10.4 billion in revenue. I just showed you they printed about $1 billion more to that cloud side, to $11.4 billion, but also the profit is rapidly expanding. Look at your cloud business. This is last quarter. This is not last year. This is last quarter. You printed just under $1.2 billion in profit from Google Cloud. Now, this quarter, like I said, now you're coming closer to $2 billion. Yes, they're adding impressive revenue to the Google Cloud side, but even more impressively, the profit, or the operating profit, is scaling up even faster. Now, we kind of buried the lead a little bit. The rest of the business is looking absolutely fantastic. Over here on YouTube, you had $7.9, nearly $8 billion in revenue last year on a quarterly basis. That went all the way up to $9 billion. Somebody's getting paid over at YouTube. Maybe I need to be posting more videos, because people are running big time ads on this platform. Google search went from 44 billion up to 49 billion. You did see a decline on the Google network, the network of sites that show ads, from 7.7 down to about $7.6 billion. Their subscription business, which they hide inside of platform and other devices, they kind of bundle a lot of revenue. My guess is the SEC is going to come in here and make Google kind of break out more of this revenue in the future. They don't want to do that from a company perspective, not to kind of hide some of the growth from competitors. Because look at this growth. 8.4 billion all the way up to $10.7 billion. Some of that is YouTube TV. Some of that is subscriptions here on YouTube. Some of it is the phones and other devices that they sell. They're obviously printing a lot more revenue there. That gave you total revenue of that $88.3 billion. And we'll show that to you here. Last year, you were closer to $77 billion. In fact, $76.7 billion. What Google's done a fantastic job over the past year at is just controlling all of their cost. In fact, their general administrative year over year went from about $4 billion down to $3.6 billion. I tell you what, if you're a Google employee and you're looking at these numbers and you've lost your job, we feel bad for you. Certainly hope you landed on your feet. With Google on the resume, you probably are able to find another job. You wonder why they're laying anybody off over here. Total expenses went from 55 up to 60. Your income from operations, 21.4 billion, all the way up to 28.5 billion dollars. Folks, we added over $7 billion to our operating income when we added just over 12 or just under $12 billion to the revenue side. Every dollar that flows into the company from a revenue growth perspective, and that's why we highlight over the next really 2 years, Wall Street's expecting kind of 10, 11, 12% growth over this company. Well, a lot of this revenue growth is just going to flow all the way down to operating profits. Net income took a big jump over the past year from 19.7 billion all the way up to 26.3 billion dollars. The case for higher corporate income taxes might have been made right there. Moving over to the balance sheet over at Google, it's about what you would expect. Now, cash did drain from the building. I'll show you when we get to cash flow what the company used its cash on over the past year. You went from 110 down to 93 on the cash side. That's actually since the beginning of December. So over the past 9 months, you've seen some drainage in cash. Shouldn't make you overly concerned because there's not much actually on the liability side. In fact, when you look at total liabilities over at Google, it's $116 billion. Just the cash before you get to the other assets that Google holds, you're at $93 billion. So needless to say, you can buy this investment and sleep well at night, sleep very well. You wouldn't have to take any sleeping aids at all. Now, cash flows coming in at $26 billion in the most recent quarter. For the 9 months, it is $20 billion higher, from 53 billion to 73 billion. You have to take a step back, folks, when we go through Google. And I know I go through these things kind of fast, really to get you kind of educated, get you a view of this, give you some help if you need digesting these numbers, give you a little bit of entertainment. But also, look, we have to just remember what we're looking at here. $26 billion of net income. We're not talking about revenue. We're not talking about over 10 years, 5 years, even a year. We're talking about in 3 months, net income profit, $26 billion. Last year, it was $20 billion. You add back in things like stock-based compensation and those types of things. Now, overall, there was some accounting things and these accrued expenses. So year over year, our cash flows were basically identical. This is on a quarterly basis, but it's still an impressive $30.7 billion of operating cash flow in a quarter, which is just unbelievable. Over the 9-month stretch, it's ticked up by about $4 billion. Now, some things we're looking for, though, in the cash flow statement, a couple of different things. Number one, where did the cash, I showed you the balance sheet, some of the cash drained out. We'll talk about that here in a moment. But from a semiconductor standpoint, we're wondering how these mega cap cloud companies are continuing to spend on purchases of property, plant, and equipment. Now, year over year, it's very impressive growth. $8 billion last year on property, plant, and equipment, which is primarily data centers for Google, up to $13 billion. I looked back in the previous report. It was almost $13 billion exactly. So Google kind of going quarter over quarter at about that $13 billion pace over the past 9 months. It paints a very similar story, about $13 billion a quarter. So holding steady there. That's probably semi-bullish for most semiconductor stocks as it relates to Google, primarily Broadcom, which is their main partner for the custom silicon chip that they run inside of that Google Cloud facility. So they continue to invest there, and you have to expect with these Google Cloud numbers that I showed you that were just impressive year over year, quarter over quarter, that they're just going to continue to invest in this business because it is becoming wildly profitable. Now, obviously not as profitable as the ad business, but in that sense, Google is on its own planet. Now, in terms of what they spent some of the money on, because you come down here, they burned through about $7.3 billion in the most recent quarter. Now, some of that went to an acquisition that they made for about $2.8 billion in the most recent quarter. But I would say a lot of that had to do with the fact that they started a dividend payment in the most recent quarter, $2.5 billion in dividend. They actually bought back almost the identical amount of stock that they did the previous period, $15.8 billion last year, about $15.3 billion. You're on about a $15 billion per quarter. This is not like for 10 years. Per quarter, Google is buying back about $15 billion worth of the stock. They're also paying about $2.5 billion of dividends every quarter as well. So it's just fantastic. You probably have room for dividend growth in the future for Google. The 20-cent dividend will likely go much, much higher. Again, they use some cash, but I think we can all agree when looking at Google's financials is they have this mountain of cash sitting here, and you would like to see them use it. They can't do any transformative acquisitions, although that could change in a week. We get a change in administration, although I think Google has very much donated to the Vice President Harris side. So she's elected. Could be some favorable stuff for Google, but they tend to continue to toe the line of regulation, DOJ investigations in these mega cap companies. With a former President Trump potentially getting reelected, you could have a realignment of how M&A is viewed, and a company like Google, which is certainly no friend to the former president, could unleash some of that cash. So that is something that we're monitoring over the next week. And just from an investment standpoint, you cast your vote however you want, but just from an investment standpoint, that's the story. That's probably the biggest story other than corporate tax rate and some other things. That's probably the biggest story that I'm going to be monitoring next week. And as we move into maybe a new administration or a continuation or a new Vice President Harris administration, we'll see obviously what happens there. Now, technically, I told you at the jump, we've got upside left in Google here. So we've got a long-term trend. I'll stretch this out to kind of a weekly view so you can obviously see, we've been in a decade and a half long uptrend with this one. Really since 2009, we have been holding this trend line. Now you can obviously kind of put a cap on this one as well if you want to. I won't do that for at least the time being. What I want to point out for is we made some highs back here with Google in October of 2021. That was right at about $150 per share. We made a new fresh set of highs back in July. That was up closer to about $190 per share. I think with Google, with these results and everything from a tailwind perspective, now I understand the company has some antitrust legislation. I'll have a newsletter going out in the next few weeks, or probably the next week or so, outlining that, what I think is going to happen there, the remedies that the DOJ or the FTC has kind of proposed. We'll talk about all of that, how I don't really think that's a huge risk and some opportunities actually for investors. I think we come up here and we make a new higher high on Google. How much higher than the 190? Who knows? But I think this one could comfortably get back into the $200 range. I think that because the valuation is still relatively reasonable. The growth rate on the cloud business, not only from a revenue perspective, but more importantly, on the operating income perspective, we are seeing that ChatGPT is chewing into maybe a little bit of the search volume and those types of things. But the company doesn't spend a lot of ad load on their search results. They certainly can ramp that up and increase that. Moving into a fourth quarter where obviously Google is probably expected to put up big time numbers. The company consistently beats and kind of raises the expectations. I think that continues. I think you're getting this one if you buy it today, not at a 22 times forward valuation, but you're probably getting this in a mid-teens valuation. And if you compare that to other stocks in the stock market, this one pays a dividend. It's buying back $15 billion worth of stock every quarter. I know I've been critical of the CEO and management in the past, and I think at the time that was warranted, but I think the company is doing enough from a shareholder and investment perspective that you continue to hold Google. And if you don't own Google, you can actually go out there and buy it with upside back into the 200s, probably relatively soon. Folks, that was Google's Q3 results. We've got AMD later. Later this week, we've got Microsoft, Apple, Amazon, and obviously Intel on Thursday. Hope you enjoyed today's video. Be back again soon. Good luck with your investments.